to Blue Tiger Weekly Roundup, 12th to the 16th of November. Kind of good news, we're up 1% for the month. It's a challenging month, I have to say. Typically November is an easy time for profit for us. September, October, November are historically our most profitable months, but you throw a hand grenade into the mix called Brexit and it all of a sudden creates a very different challenge. So what we've done is anything that is GBP based or Euro based, we've taken it off the table for now. Because they've only got to just cough Brexit and it all explodes. It's volatile, it's up, it's down. You can't predict where the market's going. So we only look to trade a normalised market. It's a little bit like saying to a salesman of a pen company, you can only sell blue pens this month. When everybody wants blue pens, right? When everybody wants red pens, right? You can only sell half the products you've got. So that's a little bit like the situation we're in at the moment. Our hands are tied. We've chosen not to trade those pairs. So trading is a lot about capital preservation as much about making profits. We make profits when we can see it's easy to take it out of the market. The rest of the time we protect our capital by staying out of the market, and that's kind of where we're at the moment. But regardless, we're still up for the month. We've got the one open trade, which is de-risked, so we call it a free trade, and it looks very likely it's going to go ahead and make a very nice 2% profit for us. It's already at 1%. So cautious trading this month for us, very cautious trading. Now I'm going to share with you two trades from last week, both of them US dollar based pairs. One is Aussie dollar, US dollar. This is our trade of the week, a very easy 3% for us last week. And then our lesson of the week, okay? Around New Zealand dollar, US dollar. So let's go ahead now and have a look at Aussie dollar, US dollar, our winning trade from last week. Okay, so our winning trade of the week, Aussie dollar, US dollar. I'm just going to point out we're in a downtrend. And this is our blue indicator that gives us confirmation that we're in a downtrend. We had a sell signal here, which was not relevant because we weren't in the office. It's a relevant indicator. We didn't take it because we weren't in the office, but we were at this point. This was our sell indicator, our second sell indicator in that downtrend. Everything lines up for us. We then make a informed decision, human intervention I call it. We look at the chart, is there any reason we're not going to trade this? And there wasn't, so we took it. And you can see we went very quickly down 2%, de-risked the trade, it retraced, almost to our entry point, which would have taken us out. But then we went on to make 3%. Now, this was a M30 chart, so every candle represents 30 minutes. You can see that we are in and out of that trade within a day. I think 8 or 10 hours, this particular trade. So most of our trades, particularly with this strategy, are intraday trades. We're in and out of it very quickly. You can see that at our 3% mark, it turned into an uptrend. So just want you to be aware of that. That's why we go for 3% profit, not 4, not 3.5 or 3 or 4. We know, we've worked out that 3% is about what we can take out. Okay, we've done our analysis, and you should be doing your own analysis of your back-tested data and your historical trading data to make sure you're maximizing your profit. Now, a lot of people will say, just keep moving it down, use a trailing stop loss. Not a big fan of that, it very rarely works out. I'm very happy to make 3% and be out of the trade instead of looking for a few extra pips. So, great winning trade. Take your profit at 3%, you've risked 1, it's a 3-to-1 risk-reward ratio, it's a very, very, very good return. And remember, if you are taking winning trades like that out of the market, you only need to be correct 30% of the time, and you'll be making 2% over 10 trades. That's a very good return. With our strategies, you're more likely to be making profit 45% of the time, which of course makes for a much bigger return. So look forward to seeing you on the next. We're going to have a look now at our New Zealand dollar, US dollar trade that we need to learn from because it was a losing trade. Let's have a look at that now. Okay, good job. I hope you learned something out of that. Let's now look at what is arguably the most important aspect of what we do here, and that's our lesson of the week. And why do I say that? We want to learn from all of our mistakes and see if we can improve to minimize those losing trades. So let's have a look at that now on New Zealand dollar, US dollar trade. Okay, so our losing trade from last week that we want to have a look at, which is our New Zealand dollar, US dollar. Now, we had a downtrend. We also had various indicators of confirmation here. The two previous signals, we weren't in the office, but we were here. So we took a short position. Now, I have reflected on this trade specifically because of this large candle here. And on reflection, spoken to our traders, and we've looked at it. What I've said to them is, if you look up on the higher time frame, so rather than just taking this chart as it stands, if we look up on the higher time frames, what you can see is a nice spike up and then a bit of a flag pattern, which always leads to a breakout, up or down, admittedly, but for me, those breakouts are very much roulette table, 50% chance of getting it right, which I'm never comfortable with. There's ways to trade it, but it's a different strategy to trading this. So the lesson for us was to pay more attention to those higher time frames. Have a look at what we're seeing, what the formation is, what the chart is telling us that the market, what the market activity is, making sure that we're not caught out. We were caught out on this trade because we didn't do that analysis further up thoroughly enough. And that's our lesson of the week. Make sure that you're cross-referencing higher and lower time frame charts. Thanks for watching, guys. Okay, I hope you enjoyed that. If you've got any questions, any insights, put comments in the box below, and my team and myself will get back to you as soon as we can. So I just want to harp on, and I know I'm harping on about Brexit at the moment, but I always try and give you something around the economic data of the week of note. And there's nothing more vital right now than keeping an eye on Brexit. That deal last week came out of the blue. I certainly didn't expect it to be announced as quickly as that. Bearing in mind we were heading towards a new meeting, a Brexit meeting, a negotiation meeting later on in November, so nobody expected to see we have a deal. Next thing, it's ratified by cabinet, and then all of a sudden the market explodes because 4 members of that cabinet resign, having given it their backing. Just shows you that we are in a politicized situation. Okay, it's not necessarily now about doing the best thing for Brexit, it's about individual and party political gain, which I'm very uncomfortable with, and I have to say makes a mockery of the political system, certainly in the UK, but this is something that we see all over the world. I am, and I'm never shy about saying this, I'm a very pro-Trump person. I'm not sure that I particularly like him as a person, but then I don't have to, because it doesn't have to be the most popular man to get the job done. What I do like about Trump is that he is a non-politicized figure. And why do I like that? I like that because I think the world needs a shake-up, a big shake-up. And I think that Trump is the second part of that jigsaw. Brexit was the first part. It's shook Europe massively. And I believe that over the next 5, 10, 15, 20 years, it could be as long a game as that, and we'll see some fundamental changes for the better across the European Union, even to the point where we see the demise of the European Union. But also in America, one of the largest global economies, superpower, one of the superpowers, the strongest currency in the world. Everybody trades the US dollar, or everybody talks in US dollar terms. It's the currency that underpins. They've got to get their act together. They can't keep raising that debt ceiling, and I think it takes a man like Trump to come in and shake that up. So Brexit, big watch. Trump obviously has a big impact as well, but for me, just keep an eye on Brexit. Sit on the sidelines if you have to. Remember, trading is as much about protecting our capital than it is about trying to make a profit, because the profits come when the profits come. Okay, and sometimes it's just easy to spot those opportunities and we take them. But when it's not so easy, then just stay out of the market, because you've got to get those percentage figures right. Remember, if you're correct 30% of the time on a 3-to-1 win ratio, you're still making profits. We try and be right 45% of the time. That's our historical figures. We're always trying to improve on that, which gives us that extra profitability. So I know I've rambled a little bit, I've gone on a bit of a political rant, but I think it's important. Watch Brexit, stay on the sidelines, we'll see what happens over this week, and I'll report in on next week's weekly roundup. So remember, any comments, any insights, stick it in the box below. Our team will get back to you. I'll get back to you myself as well. And also, click on the link below. There's an opportunity to join Coffee with Stef, right? This is an opportunity to join a forum of like-minded people to share ideas, get questions answered, to make sure you trade like a pro. I'm going to be sharing lots of what we do in that forum. Make sure you're part of it. Click on the link below, sign up, and we'll make sure that you get become part of that process. Coffee with Stef. I look forward to seeing you there.